Good morning and welcome to Trading with Larry. It's Larry Benedict and Eric Shamalov coming to you live every Monday through Thursday. And you can see us at 8:30 live on YouTube with Trading with Larry. Hope everybody is doing well on one of my favorite days. The reason why it's one of my favorite days is it's a Fed day, the second day of a two-day meeting. And what I like about today, usually you kind of always have to sleep with one eye open when you're trading and you're actively trading and running a portfolio and taking care of subscribers and whatnot, just so you're in touch with everything that's going on. And a lot of times markets are moving at night, but one of the only nights that it does not really move, or the move really doesn't matter for the most part, is the second day of the Fed meeting coming into the second day, or if it's a one-day meeting, the overnight into the one-day meeting. So here we are. A lot of bad news thrown in this morning, but somehow you'll spin that bad news as good news. So I'll let you, discuss how all the news is good news. And markets have really not even moved 4 S&P points all night, and we're just sitting up here where we are. And I'm going to give you a chance to open us up in a minute, but I call one of my oldest trading buddies, traded together since the 1980s. And, I'm like, I was looking at an upgrade in Nvidia today by Morgan Stanley. They say they like Nvidia. They see AI opportunities. Okay. I don't know where this guy's been for the last $3.5 trillion in market cap, but he sees AI opportunities. So I don't know what that means. And, we've beaten the dead horse of AI and how much revenue it actually makes and all of that. But I just, we were discussing, and it's just a product. The market's a product of a new environment of young children that are running the show, whether it's programming algorithmic computers, which I'll talk a little bit about. We picked up on the opening yesterday, something that was just one of the most amazing things I watched trade. It was 9:30 exactly on the opening. Nvidia was up 2. It literally came in $1.50. That's like $40 billion without, and we discussed this too. There's no bids and offers of any size anywhere. When I was a specialist, I used to make the markets in stocks like this, and we were an eighth of it that we traded in fractions. I was an eighth of a dollar wide. At least 10,000 shares up. And Nvidia has 25 billion shares outstanding, and there's not 10,000 anywhere to be bought or sold. So I'm just saying this is a product of the new environment, but really a lot to talk about. Fed, we got earnings, we got Microsoft and Meta after the close, and I'll throw it over to you. You can tell me what you're looking at today, and then we'll get into Trump has only 2 days to taco, and he literally said he's going to tariff the hell out of India, and nobody cares. Nobody cares. Literally, no one cares. So they've done three trade deals out of like 300, and the market seems not to care. But I'll throw it to you.
India's inflation rate is always like above 10%, I think. So what's a 25% tariff rate for them? Not much. But GDP came out. We've been talking about economic indicators pointing north ever since Liberation Day. We have the advanced reading for the second quarter, 3%. Market was expecting 2.6, and core PCE above estimates. So that's also something we've been talking about, with inflation steadily ticking up into the end of the third and fourth quarter. So we're seeing that with the PCE. We're seeing hard data come in GDP, uh, basically confirming what we see in the soft data, like the PMIs and all the sentiment indicators. So economy looks strong underneath, but some some looming clouds ahead that I don't think anybody's really thinking about right now.
What are the clouds ahead?
I think we're going to see those CPI prints come in pretty hot later on in the year. So
But are they as worried about that as they are about growth? And you got listen. Somehow they're coming in readings in the twos and the low threes. I mean, that's a lot different than 9 or 8 when we peaked out. About a year and change ago, and nobody seemed to care when they were 8. The market was still going up. So I don't know. I think.
It was an 8. It was already falling.
Well,
It was already.
wherever it was extremely high, and right now we're as low as possible. And I believe these readings are not really telling the true story, but you got commodities creeping up. Gold is back almost to $70. We discussed a little bit yesterday of how cheap gold is relative to anything else in the world.
Did you say gold 70? You mean oil 70,
I
right?
mean, old oil 70. Now gold's a zero trade. I think actually, if the Fed is hawkish or even dovish, gold is going lower. I'm still looking for that 32.80, 32.90 on cash. It's only 30. It's a percent away. You could get that in a heartbeat. Um, Currencies are breaking again. I'm now up money. Let's go,
Yeah,
subscribers. We are
yeah,
up.
you're good call. Good call.
Well, it's not a good call. We've been in this trade longer than I've ever been in any currency trade in my life, literally in my life. And I've traded a, this is a staggering number. You ready for this? I've traded $1 trillion worth of currencies in my life. A trillion. That is that is unbelievable number. Very close to a trillion or over a trillion, but in that area in my career. So I'm very versed in currencies, and I've traded it a million times, and I've never had a trade in currency stick in a three-handle range, $3 range in currencies for months and months and months. I mean, there's no movement here. So maybe we'll get an acceleration down here. That would be really nice. But we'll
I
see.
think we will. I think we will. I got short. Like I was waiting for maybe better trade location on the euro, to short it, but the way it dropped yesterday, and I think the, it's been a long time coming for the euro to drop because like the first half of the year was all like narrative, de-dollarization and tariffs and all that. But underneath it, like you look at the like what drives it, which a lot of it is rate differentials. It's in favor of U.S. rates, and so I was just waiting for a move like
You know
that to
what?
finally.
You just sounded like me in equities. It's like, yeah, I'm waiting for equities to fall too.
Yeah,
You know, and it never happens. And listen, even the dollar at 114.90 against the euro, it was when he took office at 104. So, we had a 15% move in currencies, which equating that to like equity markets, that's like a 50, that's like the kind of move we had off the bottom. I mean, the dollar has not had a start like this in 20 years. It's getting a little bit better here, but overall, it's been yuck pretty
is
much
the dollar
for.
going to rally all summer? You think? Like how
No,
low do you think euro
dude,
gets?
if I can get 100 pips out of this trade or a little more, I will dance around the room and be out of
Okay.
there. But no, I don't see an extended rally. Maybe. I mean, the truth is, and it's kind of like equities in a sense, and it's freaking me out a little bit. It's freaking me out in the sense like equities, I don't know why they go up or down. I mean, it's kind of like you trading gold, but equities, I don't know why they go up or down. Like okay, why are we up today? I mean, I know why, because Nvidia's up $1. Okay, or whatever, and that has such a weighting and everything that it's gotten the market.
We're up today because the market hit a very short term technical point at the low yesterday, and a lot of people were covering, and then the algos thought that that's the bottom, and so they have a bid in overnight before the
Listen,
Fed.
I'm
Come
I'm
on, this is
trying to remain mellow on a Fed day. I said I was going to be mellow because it's a mellow day. I got a full night's sleep. I'm
I
very
don't like you.
But when I hear you say something like that, it
Uh-huh.
just gets me, it burns me because I don't even know what you're talking about, a 10 handle move. 10 handles or 12 off the dead bottom yesterday, and that's what you think somebody's maneuvering on? That you're the cause,
Yeah,
you're the cause of what the problem is here. Okay?
I don't see a
It's a
problem.
disrespect for the market. I mean, come,
Oh,
what are
I
you
respect
gonna do? What are you gonna do when we go down 1.5%? Dude, I know what's happening. I picture your face that day that we went down 200 handles. And you want to know what's ironic about that day? You know what that day was? I'm gonna see how good your memory is.
it.
What
Was the
was
Fed
that
day. It was a Fed day.
day? Exactly. And
It
you
was
were
a Fed.
sheep. You were sheep white, dude. It was actually, I actually almost thought I had to fly to Brooklyn to help you out. It was so bad.
You
Okay,
nursed me
because
back to
you
health.
had your two standard deviation move or
It was
whatever,
like a 4 standard deviation move on a day
whatever
where the
whatever it
model was in
was.
the
But that's a product of the disrespect of the market, and that
20s. Oh,
when you come on and make a statement that S&P trading at 63.97, okay, is a great area or an area, and now we're at
you
64.11.
did. I
Okay,
didn't say it's a great area.
no, but I'm saying you're saying it's a short. I don't see it. I mean, yes, it did hold for the moment overnight, and I don't know how you get in that level, but you can
I
either.
called that level for you yesterday all day. I'm like, it's going to hit that
I understand, but you couldn't even. I know somehow miraculously you covered.
right.
Okay, miraculously you covered,
All
and
right.
then when you give out your trades to any subscribers, how would they ever have enough time to even get out of a trade? The thing was there for 30 seconds. Okay, you
I didn't
couldn't
give.
wait to
That's
cover.
not a trade. No, no, no. You can't give a trade like that to a subscriber because they're not going to have time to maneuver. B, if something goes wrong again, they're not going to have time to maneuver.
Obviously, we don't do that,
Exactly. There's like tons of
but
trades that you
but
and I
but
do.
I just
We
think
give to the
you know
subscriber.
I just think the lack of respect in the
Why is it?
market in the marketplace is unbelievable. I mean, it's actually pretty unbelievable. So
Look, sometimes the market is not going to get off your lawn, Larry. I think you see that Bitcoin, all this stuff. At some point, it will get off your lawn, but I don't know. I don't think
listen,
it's a respect
why?
thing. I think it's
Listen, I'm
just.
making money, so I'm
I know you are.
actually
That's the incredible thing.
a literally proven standard to how you can maneuver in a market that's kind of going against you, and you haven't really been that right, but you're flexible and you maneuver. And the markets over like, I don't like the trade today. Over the last 2 days, I felt very, very confident about fading the opening and having the market sell off, which it did. Today, you have a Fed day, so it's much more difficult. And the move, I'm just, I got a weird feeling, okay, that, and I'm hoping I'm wrong, that this guy is going to somehow come out dovish, even though he shouldn't, and the numbers are significantly stronger. And I don't know if he's going to fold. I know you don't think so. I don't
Yeah,
know
I
if
don't.
he's going to fold to Trump, um, moving forward. But
You didn't see the hard hat interaction uh, on the construction site between the two.
yeah,
I
I
mean,
guess.
Powell went at him in a pretty. I think it was he did it in a very education, like a professor would almost to a student.
Listen, the guy's got to be sick and tired of listening to the BS. I
So
mean,
why do you think he's going to come out like again?
I
Like
don't
he's going
know.
to
The bond yields are just telling me something looks weird. We're down to 4, even
those
after
bond.
having what?
I don't, yeah, the bond yields look weird. You're right.
I'm just saying, I don't know. I mean, you have a strong First of all, ADP is wrong every month, so maybe we're gonna have a weak jobs number because every month it came in weak. We had a strong jobs number, so I don't think
I
they
don't
have
even,
a clue.
I don't even pay
Um,
attention to the crap.
right, but I'm saying I don't know. We should be a little bit higher on the yield. I don't know. Again, the beauty of today is after we get off the podcast, I actually have a bunch of stuff to do external to the market. And really, you don't even have to queue. I mean, listen, many times in my trading career, and I probably traded through what, 12, I probably traded through 500 Fed meetings, which is a lot, right? And maybe more. Um, you know, I always have a formulated idea, okay, of what I think. But right now, I'm kind of, I'm on the fence. I think lower, but it's it's a weird market, and this is the weirdest market I've seen. This market is being run by one stock. Here, take a look at this trend that we've had every day. Guess what's down today? The Dow's down. Guess what's up today? The Nasdaq's up. Guess what's up today? Nvidia. It's not up a lot. It's up dollar 10, whatever. But it's one stock holding up the Nasdaq 100 because it's got such a weighting. Um, and I think that leads to problems down the road because this is going to be, it's fully valued minimally. What happens if it has any type of correction? I mean, what's the Nasdaq going to correct? Much more than anything else out there. And then here's something that I want to like talk about a little bit. Let's talk about this trade. And again, like I feel like you're a product of the environment, which is whatever it
Which
is.
I'm not, but you can think that. That's
Why?
okay.
All you do is correlated trades. I'm gonna buy Nasdaq, sell S&P. I'm gonna buy Dow and sell
You're in
Nasdaq.
that today. I'm not even in that. I
Dude,
actually
I
took
don't
your
care that
advice.
you're in it or
2 days,
not. That's the
two nights
trade.
ago, you went at me for that spread. I'm like, you know
But
what,
that's
Larry's got
the
it.
no,
I'm
but
just
that's
gonna
the
go
trade.
directional. Now
That's
you're in it.
That's the trade. No, I'm not in that trade. I'm in that trade through I would never trade futures on that trade. It's funny. You and I are like so different that it's crazy. Like you want to
Like,
trade cattle. You say you want to trade cattle. You'll never trade it. You're so scared.
I've
I don't
traded
think they
cattle
have
enough.
maybe they have micro mini cattle where you can buy
Like
like
calf,
a
like
cattle,
calf
you can buy a
futures.
cow's leg or something. I mean, literally.
No, you
I
have
mean,
calf futures, baby cow futures.
right, exactly. I mean, like you're talking about trading cattle. That's like trading fucking
Yeah,
crack
lean hogs,
cocaine.
cattle, corn, soybeans, soybean
Well,
meal,
I mean, ag
soybean
commodities.
oil,
No,
all is one combined position.
no. Listen to me.
No,
Ag commodities are completely different than cattle. I mean, cattle, lumber,
they
all.
pair those up all the time.
No, but ags are real. I mean, ags, you have markets down 2% for the year, 3%, 5%. Cattle, if they get some kind of freaking famine, whatever, that thing can run 100+% or crash. I mean, you're trading. And then the thing that I don't understand when you want to trade stuff like that, you don't have the in. You don't like the beauty of trading like the equity markets is when I do it, I put together all the puzzle pieces. So to the left of my screen, which you can't see now, is a Bloomberg terminal. And I'm talking to every firm on Wall Street, getting the trade information, putting the puzzle pieces together, getting the market on, doing all of the stuff. That's the advantage. Like if I'm trading live cattle, like what do I know? Unless you're, deeply, intimately involved in that market with boots on the ground, it's just gambling
I'll actually I'll disagree with you. I'll tell you why.
okay,
So,
okay.
the only reason I ever brought up live cattle is because of the trend in price as an indicator that for some sort of inflation to prove a point. But I've traded a lot of live cattle, and what I will tell you, I've dealt with a lot of experts that have the boots on the ground that are counting the lots and everything involved in that. And there were times where they were absolutely wrong. Okay, any person in Chicago that trades futures will tell you that. The people, the experts, get it wrong all the time, and they're like in it, you know. And sometimes it's the quants that get it absolutely right, and even in markets like cattle or lean hogs.
Okay, dude. I mean, I don't know. I You don't think you need to do research, know what all the big players are doing, etc. You're
There's
looking at a well,
you know what the
why
market
trade
sometimes is
cattle?
fundamental.
Why trade cattle? You could trade. I'm gonna
You
say
don't trade
something.
cattle.
You could trade dog shit. I mean, it doesn't matter. Literally. I mean, I'm not kidding. I mean, I always
You're
say it myself.
you're right.
Like,
You could
literally, I think I could make markets on almost anything by knowing the human element involved in the making of the transaction. What's happened here is now, we discuss this a lot, but I saw it yesterday. I know I got a little sidetracked, but on the opening, they sold Nvidia down like $1.50, and they started buying like every other Mag 7 like wildfire. Like it was weird. It was
right at the
almost
open.
like,
Yeah.
and then they sell the Dow, and then they buy the Nasdaq. Why is that? Like, I've been trading for 40 years, and up until maybe the last 5 years or 4 years, we have this correlated trading where on a day where you see the S&P down 100 spoo handles, you have the Dow up. Like, how can that work? Back in the day when we would get smoked, everything would be down because people had to sell their portfolios. Now it's almost like fake. It's almost rigged. They're like, okay, we're losing here, so we're going to take our money out of here and buy Dow. Dow is safety. I mean,
Although it's funny what you say, that's exactly what it is. I think where, in the beginning you talked about disrespect for the market and all that.
totally.
Where I do see it is in exactly what you're saying, because I think the quants have taken over the market. And what do quants like to do? They love to revel in data and like swim in it, you know? They love data. They love it a lot,
I don't
you
even
know?
think it's data. I think it's a
And yeah,
computer
I think
program.
that's exactly what it is. I've seen it up close. This is what they do. You take 100 PhDs in Wall Street, 95 of them don't know what a dividend is or like basic things in finance. They look at the market as numbers. So they see one thing go up, another down, and they're like, well, usually these are correlated. And to them, that's a relative value trade. And they have so much data available. They have all the tools now with AI improving every year that they're just picking these things off like 100 times intraday.
Right, but let me ask you this. How come every time the market has any type of sell-off, even like the sell-off that we saw in early April, the computer shuts down and blows up? How come? They weren't around. They weren't around.
They're
They're
all out.
trading.
They're all out. As soon as liquidity dries out,
But
volatility picks
no,
up.
but they are. But Eric, they are the liquidity. That's the thing. So if they're, it's not a liquidity issue. They are the liquidity. Liquidity is fake. It's just them buying, you know, X to sell Y to buy Z to do this. So they're creating the volatility. But when all of a sudden the market moves a decent amount, they think they're going to blow up and they pull out of the market. Okay. And I've seen this for the last 10 years with this stuff. So my question to you, yeah, like today is such an easy day for them. They'll just, buy, sell this, buy that, make a couple of chips, make some money. But every time the market gets difficult, volatility rises above 30, the computers are out of the game. And you want to know what? That's when trading is the best and pure. And that's when you can make literally, I know in the newsletter business, and in the subscriber bit, everyone wants to be a millionaire in 5 hours, and the problem is, like with the opportunistic trader, which is my services, there is, it's not hard work, but there's work involved. We grind out P&L, we utilize our P&L to get bigger, to take more chances, and that's different than what we're seeing here with these algos. I mean, listen, it's crazy. I don't want to go back to it, but like Nvidia, people, it's $180 stock now. How much Nvidia can you buy? You can't buy a lot because 1,000 shares is going to take you into a crazy amount of money. more money than most people have to invest. So all the buyers are buying 100 shares, 200 shares, 500 shares. Okay, at the most, they need a 5 point move today. So that's why there's movement like this, is because it's a day trading stock and people are in it looking for crazy moves. And you know, now, like, it's funny, yesterday the stock was down for the first day in a long time, and now it's up more than it was down yesterday pre-open off of some ridiculous upgrade. But overall, like, scanning the macro picture, bonds are a little bit weaker, but they're only 435 on the yield. I don't expect that to break out on the yield top side unless he gets really, really hawkish. Um, and I don't expect it to really go too far on the downside because the data is strong and the numbers are ticking up on inflation. So it can't really go too far anywhere. Again, we touched on the dollar right out of the gate. It's weird. The euro is performing better, the dollar against the euro, than anything else out there. Really, I thought that the yen would be above 150, and it's not. It's 148, hasn't moved much. And the British pound is 133. That caught a move last week. So the question is, does the euro have a little bit more extension here? And you got to remember, on the high side, this euro got above 118. So if you could take it back at 113, 114, these are big moves. They're four or
Yeah,
five
big.
percent moves. So we
You
covered
got
the
to
bond.
remember about the euro. It was so narrative driven that first half, and one of the big things was, oh, NATO is going to do its own spending now. Germany is going to do its own spending on defense, and all this contributed to the euro going up. And with this trade deal, I mean, the first leg of this down move in the euro was the trade deal over the weekend, right?
Well,
So
let me stop you for 1 second, okay? I'm not 100% sure this trade deal is a done deal. How do you like that? I'm hearing rumblings that many of the EU members are not happy with the deal. I don't know what they're not happy with. They're getting away with an unbelievable deal. And then Trump is teetering on moving the tariffs up to 20%. I'm glad you segued into this because I think it's an important thing and the next thing up on our agenda. I mean, listen, think about this, okay? Think about what we've gone through in the last 2 months on all these fake trade deals and how the deals were amazing. He had a deal done with India. There was a done deal with India. Done. They said they had a deal with India. Okay. He just came out this morning and said India is going to be tariffed at 30 to 35%. Okay. No deal. They're the worst of the worst. Like everyone's the worst of the worst, but they're the worst of the worst. This, that, and the other thing. And the market doesn't even give a darn, doesn't even care. Okay. You still have Mexico and Canada out there. And he said today that tariffs are going to be put in full effect on Friday. There's no deals coming from either one of those countries. They're not even talking. So, and then throw on top of it, they wasted 3 months flying around the world. Switzerland, remember the big deal? You don't remember the rally we had off the weekend meeting in Switzerland with China, and they have a deal and this and that. Dude, that's what I'm saying is so weird about this market. It rallied 10 times off of deals that never happened. It's the funniest thing. We're on the weekend, Sunday night. Oh, great trade talks in China. They met in Switzerland. It's going to be a deal. There's no deal, not even close. But we rallied 80 spoo handles off that. That's what I'm trying to understand. So
oh, there's nothing to understand there. You're absolutely right. That is that's an insanity element to the market, 100%.
well, what I'm saying is there are no
Good example
deals.
of that is last week we had the market rally two times on the same EU trade deal news.
Right. So isn't that telling you that the market is so skewed with a bias to the upside and everybody is long? And my
Yes.
my question is, how about this one? We Israel attacked Iran, okay? The US let them do it, okay? Then we came in and quote unquote blew up their nuclear capacity, which, to be honest with you, we did nothing. We literally didn't even, we barely, put a hole there. Nothing. Then that dies. No one talks about it, and nothing has happened. So, and now Trump comes out with an
Well, that's because
ultimatum.
the market was only focused on the effect on oil price. As soon as they realized oil is going to be fine, it's a non-event.
But even if oil, dude, listen, we were in a raging bull market with oil at $130 a barrel. Oil at 70 is a joke. It's nothing. It's not impactful to the market. All I'm saying is
Yep.
it just leads me to a weird place. Like what happened was, if you look back on it in April, he came out with these tariffs. They were higher than expected. He acted tough. No one really knew that he would turn into Taco Trump, okay, and not do anything to anybody, which is really what's happened here. But they were afraid, and that's what sold the market off. They didn't know. They thought he was real. That's the thing. They thought Trump was real. They thought that he was going to implement tariffs. He was going to do what he said, which was make people build factories here and manufacture here, which has gone thrown out the window. Okay. He touted the deal. Yeah,
I
100% it
mean,
has.
give the
100%.
give the guy time. I mean,
Time
he's
for
been in
what?
office 6 months.
Eric, the only way people are building a factory here is if it costs them more money to import the goods than it would to build the factory. There's a direct correlation. And at 15% tariffs on the EU, no one's building a factory here. And you want to know what? Guess what the tariffs they put on us are? 15%. So we have reciprocal tariffs. We did such a great deal
Yeah,
that
but
we have
it's not just
reciprocal
it's
tariffs.
not just the tariffs. They're direct. You know, you have the invisible hand of the market guiding things along, and there's going to be stuff in
What?
all
I
these
don't know what you're
benign
talking about. The invisible hand of what?
of the market. It will. You know what if the administration is building policy
Yeah, listen, you're a
to get
product.
things
You're the
onshore,
product.
it's going
You're
to
a
happen.
Dude, you're a product of a freaking $18 straddle. That's what you are. You're a product of the $18 straddle. I don't blame you because, it's lulled you into a false sense of security. But
What does an $18 straddle have to do with the onshoring of American manufacturing? I
a lot, dude, it has to equate to the market, okay? Dude, onshore dude, they're not manufacturing here. They have no reason to do it. Okay, listen. Do you think? Now I'm going sideways. Do you think the EU would sign a deal, 27 countries with us, unless it was favorable to them? I mean, come on. They waited to the last day. We called them up. I mean, come on. You don't see the scenario? Trump's like, we have no deals. We get on the phone, call up this guy, get a deal. We need a deal. Come on, dude. 15% tariffs are a joke. Better off not even having them. It's not even worth it. Okay. And the thing is, the whole point of him originally doing this was to force countries to open up trade and build factories here. And there are no factories going to be built here on a 15% tariff. It's not enough. Not enough. So, they got okay, wait, they got a UK trade deal, maybe. I don't even know what that was. They got an EU trade deal. And what else? What other trade deals did they get?
I don't know,
Besides
Larry, but my silver is getting hit. What do I do?
Dude, I have no idea why I told you that I think that these markets look at gold, dude. It's only $30 away, which in your world, in the low volatility $18 straddle world, that's a lifetime loss.
1987 crash in
The
gold today.
market, listen, the people trading this market have been lulled into a false sense of security that nothing moves. Okay. The long volatility players have been exited out of the market. I mean, I don't, I talked to a lot of players at Goldman, and other large firms, and the long vol guys have gotten destroyed. They have taken these guys out. No one wants to own volatility. That's why it's $15. No one can own it. and only 2 months ago it was 70. So they have taken that trade, they have swung it. Everyone is long that trade. But what I'm going to say on this podcast today, which I think is important for people listening, is don't be lulled into the false sense of security that none of these markets are moving, and they haven't been. So these $18 straddles have paid off. They paid dividends. You have to pick the right direction, but they've been good. That's in equities. But we even touched on currencies. Currencies haven't moved three full figures in 3.5 months. I mean, these moves are, I remember trading currencies, you wouldn't even know what handle they were in or what figure, whether it was 115, I'd be on the phone quoting what handle, where are they? I remember a night, I'm going to tell you a story. I remember a night, and it was my son was born in 1995, and you could probably look back on a chart. In 1995, that's when Soros was really involved in the markets back in the 80s and into the middle 90s. And players would really run these markets. And the yen in one day had a 30-figure range. You can pull it. I'm going to have Thomas, when he gets back, pull it. They had like a 20 to 30 full figure range overnight. So it was trading at, the yen used to be 300. Okay. The dollar was significantly stronger. Yen got down into the 60s or 70s on the other side of that. But people are lulled into a false sense of security. And I would just say, off this podcast, I think it's important to be a little bit careful here. And I don't expect it now. We're in dog days of summer. We're July 30th, right? And there's not a lot going on. And, people are going to try to enjoy their rest of their summer vacation for a few weeks. But I expect, much higher volatility, much bigger moves, a lot more market uncertainty. And, things are priced for beyond utter perfection. And listen, the markets in general in the last 10 years, not the equities, but individual equities, art, how much art, real good art, is up 20-fold in the last 10 years. 20-fold. I mean,
Exactly. Yeah.
it's insane what has gone on here. And at some point,
It will
somebody's gonna
continue.
somebody's going to have to pay the piper, and people want extended crazy moves in every stock. Like, listen, if we
Wait,
were,
you think art is going to go down?
do I think art? Yeah, I do. I think it can go down. I think it goes up and it goes down, and it's a product of the environment. Hey, I'll tell you this. There were May auctions for, contemporary arts that were canceled, okay, and did horrendously poorly after the April sell-off. So yes, I definitely think art is a derivative. Art is the last thing people need. Okay, that's not helping you get food on your table. Okay, so I would tell you that when the market went down, and I have facts on this, that Sotheby's had extremely weak auctions and canceled their auction just off a market correction of 25%. So yes, I think it could go up, it could go down. What? Why? Dude, here we go. You only buy, like, you're only going to buy Bitcoin, you're only going to buy gold. What, you're only going to buy houses? You don't think housing prices can go up and down? I mean, come on. In the Northeast right now, housing is getting smashed. Connecticut, destroyed. Okay. Just so happens where I live in Florida, it's held up really nicely, but it looks to me like Manhattan real estate is a little bit soft. And if this mayor wins, it's going to get a lot softer. So, I mean, come on, everything is supply and demand, Eric. I mean, and the thing is right now, this is a game of musical chairs. And as long as there's someone to buy your Nvidia higher than where you bought it, you're feeling pretty good. But if the music stops, that makes it a little bit different. But why do you think housing can only go up or art can only go up? Yeah, over maybe many years, but there are pockets of time. Look at the housing crisis in '08. I mean, that blew the market. Literally, Manhattan real estate, Park Avenue office buildings were on sale for zero. Literally, they couldn't even pay their mortgage. So, yes, I feel like we're as good as we can get right now in the market. Market's been up. This will be the third straight year. We're up 70% in the S&P. Everybody is indexed to S&P. Now in S&P, we discussed this. Nvidia is 10% of the weighting. So, you're really buying Nvidia for the most part. The Mag 7 is 30-40% of the S&P 500. The other 490 stocks or 493 stocks are half the index. The other half is 7 stocks. That's a little dangerous. I know they can only go up. Listen, I remember in 2022, I bought Meta at $80. I mean, I sold it at 200, and I thought that was the greatest trade of all time. It's now 700. And how do people have the money? What do they buy one share for $700? Like, how do people have this kind of money to buy like a sizable position in this? So I don't know. I'm a little bit leery. I'm not saying it's happening today. We're in the you know, we're in the dog days of summer. I don't like that this stuff is so correlated. Like you're saying, everything is an algo. So I don't know. We'll wait to see. Today's a good day. Take a walk outside, relax. Fed comes on at 2 with the announcement, and then the press conference at 2:30. We'll be back to everybody tomorrow.
Your boy Thomas just texted us. What's up, Thomas?
What he said?
And he's like, Bank of America says there will be no Fed rate cuts this year. They're joining my bandwagon of no rate cuts this year.
Well, listen, can I ask you this? And
What do you think?
other than Trump yelling and screaming for whatever reason that he has in his head that the Fed needs to cut rates, if you're looking at the market from the outside, why would you cut rates? You have a stock market I'm not going to use the word bubble, but a very inflated stock market that's gone straight up 70% in the last 3 years, okay, with retail. Now you have to admit this: retail public is heavily involved in this market and
Yes.
creating it on a daily basis. So you have retail public involved in the market. Okay, you have a market that's expanded, and you have data that is showing a little bit more inflation and stronger growth. Why would the Fed ever? They should raise rates. There were people 2 meetings ago that thought they should raise rates. So other than Donald Trump running around yelling and screaming that they should cut rates, but he doesn't even know why. Okay. There is no reason to cut rates. So without him, I'm in that camp also. Like, there's no rush. The reason why they manipulate rates and move rates is to protect the stock market. I mean, that's like the Fed's mandate. So the stock market is running wild, doing unbelievable. Why would they need to cut rates? When they've cut rates, and I've been in this business for 40 years, the only time I've ever seen them cut rates is when the market stinks and they want to freaking get the market going, get the economy going, etc. The market's doing amazing. Everything is amazing. The level of complacency is off the charts. I mean, off the chart. I mean, they think buying Nvidia, which is the most Nvidia is a chip seller. I know they do other things, but their main business is selling chips to AI. That's the most volatile business in the world. And I've seen that with Micron Technologies. And Micron Technologies was the darling of the 90s, and it went to $1 from hundreds of dollars. So what I'm saying to you is you're in a commodity business. That's their business. Everybody has expanded, data centers, basically AI, this, that. I mean, we run a risk of this stock being such a heavyweight in the index, and the complacency in buying Nvidia and thinking that it's like like buying AT&T that gives a dividend is scaring me. So, I agree with you. The Fed should do nothing until further notice, and that could be a long time, more than a year. Okay. I think they may have to raise rates. And if Trump wasn't the president, they'd be looking more at doing that than people are expecting, because you want to know what, Eric? The tariffs haven't even really hit in. Okay. But did you see Black and Decker today? Black and Decker basically said they're missing numbers because of the tariffs. They're not even in yet. Like, they're missing the numbers. They expect massive price increases. So I just think the story hasn't been written. We're dog days of summer. We're here at the opportunistic trader to help people make money. So we're going to just do that, in the face of what I believe is on the outside here. And, that's what I'm thinking. But Fed Day, I'm going to throw it to you to close us, but my thought is obviously nothing. I don't think he's going to be as hawkish as you think. And, bonds are looking, I mean, they're backing up a bit now, but, yesterday's move in bonds came out of nowhere. I mean, we didn't really talk about it, but they had a 7 basis point move in 10 years. So, anyway, we're getting close to the opening. We don't really have to rush because I don't see much to do. So you can close us up, and we'll be back to everybody tomorrow with the assessment of the Fed and big earnings tonight with Microsoft and Meta.
All right. We talked a lot about relative value, things up, things down, and the algos taking from one into another. Where I see that right now actually is in healthcare. XLV ETF. I think everyone should keep on their radar and keep those top 10 holdings in XLV on your radar. Humana is one of them. They had earnings today. I think we were discussing some of these names, you and I, earlier. But a lot of these healthcare names have been really hit as the entire market has been going up. I think they might start seeing some relative value in them. One stock that has been leading the healthcare sector has been Johnson and Johnson. That has been going up. Everything else, not as much, not nearly as much. And I'd keep that on the radar. It looks like a better buy than just S&P 500. So I think it has some catching up. Another sector hit massively by narrative since Trump won. That has been in a downtrend since the election. XLV. Maybe it's coming out of it now.
Yeah, you know what? I don't really see a trade there right this minute. As we've been on the air, and I'll leave people with this, gold just dropped another 20. It's definitely getting close to the low of this move. I may want to not buy those levels. I may want to move it down a little. I don't think it looks too good here, but we'll keep
Could
an eye
be the
on
summer
that.
of the dollar. I mean, this. I think it's reacting to the dollar here.
Yeah, but it never, we've discussed, we're late, so I don't want to go over this, but you said the dollar didn't matter, bonds don't matter, nothing
Yeah,
mattered. Now all of a sudden it matters.
there's snippets of time where like it does snippets, and then
But
it'll
that's
snap
the,
back.
but dude, that's just honestly, that's the narrative that they throw on top after the market moves. Like, let's say interest rates tick up, tick up, tick up, and the market doesn't go down. They don't say one word about interest rates. The first down day, they go, "Oh, the market was concerned about interest rate." It's excuses. Trust me, CNBC calls me all the time to get information off me, to write articles and add to their information sources, and they're searching around looking for reasons, and that the reasons are what you would call after the fact. So gold looks interesting. A little more interesting lower than here. But my question to you is, because you're my resident gold bug, gold's down over 20% now or close from the high. Are we in a bear market in gold? I know you don't like to sell it, but are we in a bear market? I mean, maybe we're in a bear market in gold. Maybe. We don't know it yet, but the thing got up to 3,600 plus, and it's now 3,300. So you're talking 13. If we go down another 5 or 4, it's not looking that good. But
To
again,
answer your question, I'll just pull up a chart of gold, and then you tell me if we're in a bear market in gold.
no, it's up on the year,
No, no, no,
26%.
no. I know it's up on the year, but just take a look at this chart. Does this look like it's in a bear market? Here you go. Here you go.
Yeah, but
Is
you're
this
going to
a
pull up
bear
a
market?
chart, but I can't get anything off that chart.
because it's not in a bear. I mean, how's this a
Eric,
bear market?
but let me ask you this: when the S&P corrected 20%, the chart still looked incredible. It was still up 50%, 70%, but it came in 20%. So, it's a market within a market. You got to trade. I don't think you can look at you got to trade time segments. We trade time segments. So, like, if it goes down 20% off the high, yeah, is it really in a bear market? Like, how could you call gold in a bear market and it's up 20% for the year, but it's in a bear market for that time frame? So we can go more into that, but we're getting close to
Well, it goes unchanged on the day on the Fed meeting. I'm hitting that buy button.
Bro, you're probably in it now. Well, who knows? You got a hidden micro gold mini future or
Hedge,
whatever.
I hedge that one micro contract all the time.
Anyway, everybody have a great day. Hope everyone has a great Fed day, and we'll be back tomorrow with the Microsoft earnings, the Meta earnings, and analysis of the Fed meeting. Have a great trading day. Enjoy.